Markets digest Fed's message, pandemic remains in focus. Coronavirus-related uncertainty pushed Wall Street stocks marginally lower on Tuesday, while the overall trend remained bullish amid ongoing vaccine rollout and expectations of more economic stimulus. Of note, Senate Democratic leader Chuck Schumer said on Tuesday that Democrats will move forward on Biden's relief plan without Republican support if necessary. As a result, the S&P 500 lost 0.15%, while the Dow Jones and the tech-heavy Nasdaq Composite shed 0.07% each. Asian stocks were mixed to higher on Wednesday despite the negative bias on Wall Street. On the positive side, the International Monetary Fund raised its outlook for global economic growth this year to 5.5% from 5.2% projected earlier. On the other hand, market players remain cautious ahead of the U.S. Federal Reserve's monetary policy decision and fresh quarterly earnings. As such, Tokyo's Nikkei 225 index added 0.31%, while the Hang Seng in Hong Kong shed 0.32%. The Kospi in South Korea dipped by 0.57%, while the Shanghai Composite Index climbed 0.11%. In Europe, equities finished lower amid uncertainty surrounding vaccine rollouts as global coronavirus infections have topped the 100 million mark. The Pan-European Stock 600 slid 1.1%, while telecoms bucked the downward trend to add over 1%. On the data front, France's January consumer confidence declined from 95 to 92 versus 94 expected. In Germany, February GfK consumer confidence arrived at negative 15.6 versus negative 7.9 expected. Elsewhere, the European Central Bank Governing Council member Klaus Knott said that the European strength would take prominence for the central bank if it threatens its inflation outlook. He also noted that the central bank will act if finance conditions worsen due to market stress. Wall Street stocks closed sharply lower overnight, leaving the Dow Jones and S&P 500 index negative for this year, after Federal Reserve Chairman Jerome Powell underscored the long road to economic recovery ahead. Furthermore, Wednesday marked the worst day for all three major indexes since late October. In particular, the Dow Jones Industrial Average shed over 2%, the S&P 500 lost 2.57%, while the Nasdaq Composite fell 2.61%. As risk sentiment turned to the worst, the safe haven dollar demand picked up on Wednesday, sending the U.S. currency higher across the board. As a result, the Euro-USD briefly dipped to 1.5-week lows around 1.2060 before bouncing slightly above 1.2100. The common currency suffered losses as risk aversion in stock markets overshadowed the dovish Federal Reserve and kept the greenback bid. Meanwhile, the US dollar-Japanese yen rallied above the 104.00 figure, extending gains to 104.35 on Thursday amid broad-based strength surrounding the US currency. If the upside pressure persists in the short term, the pair could challenge the 100 DMA that will likely act as resistance. The last time the USD-Japanese yen traded above this moving average was in June 2020. Elsewhere, oil prices dipped amid dollar strength while staying above the 20 DMA. Earlier in the day, Brent crude briefly jumped after the Energy Information Administration reported a crude oil inventory draw of 9.9 million barrels for the week to January 22nd. However, the futures failed to preserve gains and retreated below $55 as risk sentiment deteriorated across the board. Today, oil prices have settled marginally above this level, trying to hold above the moving average, a break below which could attract more intense selling pressure. Today in Asia, stocks followed Wall Street plunge amid deepening concerns about stretched valuations in stock markets. Besides, vaccine rollouts have not progressed in Asia as quickly as they have in the West, with outbreaks persisting and have grown in some places such as Japan. As a result, Japan's benchmark Nikkei 225 fell 1.53% and Australia's S&P ASX slipped nearly 2.0%. South Korea's Kospi sank 1.96% and Hong Kong's Hang Seng dropped 2.25%, while the Shanghai Composite shed 1.79%. Fourth quarter GDP and weekly jobless claims from the U.S. will be in focus later today. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.